Good evening, traders, and welcome to another edition of the Traders Corner Daily Market Update for the 6th of December 2010. Well, today it seems that the Euro's really enjoyed its fun in the sun for the time being. After the past few days of rallying, it declined in a big way across the board. Now, this decline really shows us how fragile the euro is at the moment. Obviously, we had a couple of days of good data and some negative data come out of the US, which helped to push the euro dollar higher. But as soon as the market starts to focus again on the sovereign debt crisis, what happens? The euro declines. So basically, what this is telling us is that certainly in the medium term, the markets believe that the eurozone isn't quite out of the woods yet. So even if we solve things with Ireland right now, then it's not quite the end. Tomorrow, Spain could come in, or Portugal, or Italy. So ultimately, we're not going to go too much into this because we've been speaking about it over the past couple of weeks. But ultimately, negative euro sentiment for the time being, and certainly going into the year end, unless something changes. Ireland tomorrow due to vote on the new budget, which will basically determine whether or not they get the aid. Maybe that will give the market some reason to be positive towards the euro, but certainly in the medium term, the euro looks like it's heading lower, and there are technical setups to show this as well. There hasn't really been too much news in the market today, but what we have seen is some potential technical setups present themselves. So we're going to not spend too much time here, but jump into the charts and really see technically what's going on and where we can, take advantage of some potential opportunities. One thing we do have to note, though, is tomorrow the RBA, the Bank of Australia and the Bank of Canada have their rate decisions due out. So, whatever our technical setups are, we need to be mindful of the fact that we have two interest rate decisions coming out and obviously the accompanying statement. So even if we do get the technical entry, it's possible that these pieces of information could push the trade against us. So all that means is we need to be mindful when we're entering our positions, maybe enter half a position to start with, and see how the markets go. So without further ado, let's take a look at the charts and take a look at some of the opportunities that we have. Okay, so let's start by taking a look at our euro chart. As we were discussing earlier, the euro did decline today. However, taking a look at the chart, we can see that it has recovered a little bit over the past couple of hours, presenting us with a nice opportunity to go short. Now, just taking a look at this chart here, what we can see is that we've got a downwards trend on the 4-hour chart. See, the market is making consistently lower highs and lower lows. What we've got is a pullback to the 61.8 Fibonacci retracement level, which also happens to coincide with the downwards trend line and this support and resistance line here. So we've got a confluence of levels here. We've got various different levels that the market's bouncing off of right now, and if we get the technical setup, we'll be looking to take a break of this low here towards the downside, targeting somewhere around the 129 level, and if we get a break of there, then further down towards 126. But obviously we need to wait for the opportunity to present itself. If the market breaks out of this trend line and starts to move upwards, then the short opportunity won't be on anymore, and we'll be looking for opportunities to enter on the long side. I was also taking a look at the charts earlier and saw that the pound yen is also setting up quite nicely for a long opportunity. We see that the pound yen, even though it's been consolidating over the past couple of months, if we go into the weekly chart, we can take a look to see where the pound yen has come from, and it's come from the lofty highs of 256 all the way down to 129. It had a brief spell back up, and then it's just been trending downwards since April of last year. So what we have, if we go back to the daily chart, is we've got an opportunity to get long above here. If the market fails to go any lower than this and starts to trend upwards, what we'll have is the market making basically a higher high and a higher low, indicating that we could have a possible trend reversal. And if that's the case, then we'll be looking to get long somewhere above this level, somewhere in this region over here. Jumping into the Euro CAD, earlier on, a couple of weeks ago, the Euro CAD broke below this key level here of 13664. It trended downwards, then over the past couple of days, it's retraced a little bit. If the market continues down below this level, breaking this low here, then that's going to be a sign for us to get in short on this particular pair, targeting this level initially, so the 13069, and if we get past there, then we could have a nice ride down to 124 and around that area. And considering the fundamentals at the moment, it's very possible that we could get that move. So this is another one that we're watching quite closely at the moment. The New Zealand dollar has presented us with, well, it did present us with a long opportunity. We actually missed this, but I thought I'd show you guys anyway, just in case you guys missed it as well, just to show you the sorts of opportunities you can get when you're following the trend and you're playing, you know, retracements back to certain levels, to Fibonacci retracement levels, along with previous resistance becoming support. So what we've got here is basically got the market trending upwards, breaks through this level, which was resistance, comes back down, finds its support here, moves on upwards. Then we drew our Fibonacci retracement line from this swing low here up to this swing high, and we can see that between the 50 and the 61.8, we've basically got the previous level of resistance, which has become support in the past. So naturally, if we think the market's going to turn around, here would be a great point. And then what we get at this level is some kind of a spinning top. Then we get the bullish engulfing candle, and if we got long on the open of the next candle, this would have been good for a good couple of 100 pips so far, targeting the upside of around the 80 level for a stop somewhere below the 73 level. Gives you a good risk reward of at least kind of, you know, 3 to 1 there. So that's the kind of trade that you want to take. Taking a look further, the USD Swiss franc, so the dollar franc. Again, you know that we've said that we like this in the past. We like the long side, and again, it's setting up nicely. If the market can push up here, the market doesn't seem like it wants to trend lower at the moment. So if we can get a break above this level, then that's another opportunity to the long side. Fundamentally, we think this is a good play to the long side. So we're just waiting for the technical setup, and we'll just keep playing this until the bigger trend gets involved. Finally, the Australian dollar, we have a very similar setup to the New Zealand dollar, and that's basically, we've been in an upwards trending market on the daily. The market's moved up to a point over here. It's now retraced. We drew our Fibonacci retracement lines in from this swing low here to this swing high. We get a retracement to this level here, which was a minor area of support beforehand, so we'd always be looking at this area. We were short here, and when we saw this area coming up to us, we moved our stop to break even. If you remember, we mentioned a few days ago, we got taken out. Unfortunately, as I said on Friday, we missed this opportunity, but just taking a look at the setup again, more for educational purposes than anything, you see that again we've got sort of like a spinning top and then a bullish engulfing candle, and we would have wanted to take a break of this or an open of this candle here to the upside, again presenting us with a nice risk reward opportunity. We also get a break of this level, which is one of the levels we would have taken for a break to the downside. So we've got a lot of things lining up here, and we basically would at least we'd be in a lot of profit right now, in a position to move our stop to break even at the very least for a free trade up to the previous highs of 1.0264. So they're the technical setups for the moment. As with everything, remember, these are for educational purposes only. These aren't trade recommendations. If you believe they're good setups, and please make your own judgment and make the decision by yourselves. All we're trying to do is highlight opportunities that you that we're looking at in a bid to try and educate you on the sorts of opportunities that are profitable and have shown to be profitable over time. I hope you've enjoyed it, and I look forward to speaking to you tomorrow. Take care.